Good afternoon, everyone. It's Chris from Solstice ATR as well as Excel. You can find me on the website at solsticeatr.com, on YouTube, Twitter, Instagram, as well as Discord. We use this adaptive algorithm for up market, down market, as well as side market. The most important thing, this is for illustration use. We are not a broker dealer. Our past performance doesn't give us any indication of future results. Remember, this is for education. Secondly, you cannot copy the material unless requested by giving us a call or getting to check the website policy. Let's go to the first slide that I had on November 5th, and I put the different sectors on the chart, and I told everybody, remember, we're going to use the commodities, which is the S&P, the small cap, gold, transportation, banks, crude oil, and so on, and the bond market, Aussie dollar, American dollar, US Aussie dollar, as well as the transportation. And then I put some stocks here from Apple on the tech sector to Costco to Caterpillar, Lockheed Martin, Boeing, Blackstone, Home Depot, and so on, gold, TNX, Johnson and Johnson, Guild, Lowe's. I duplicated this one. I have to fix it. Sorry, Baba, Starbucks, and Lulu. Second, I put some of the ETFs in the SPY, which is the most sectors, small cap IWM, QQQ is the Nasdaq, DJX is the Dow Jones Industrial 30 companies, and we put the New York Composite NYA. I put a couple of ETFs here. I put TNX, JNK for the bonds, HYG, XLF for the financials, Schwab midcap, growth, and dividend. Some different sectors in the international market, as well as the ETFs for the S&P 13 sectors. Last, I will come back to this one, and this is the who we are. Remember where to check us out. Give us your commentary, smash the like button, share it with your friends. Let's go to the first slide here, and I put the micro ES5 here, S&P 500. We can use the SPY or we can use the SPX. If I zoom down here to the bottom from the February 19 cover till March 23rd, we consolidated, rallied back up, consolidated here in September, October before the November, December rally. We double bottomed here in February in 2022, rallied high. In 2022, we came back to October 10th low. December was a low, and in January of 2023, we double bottomed on March 23rd, or triple bottom, if you want to call these triple bottoms, because of the Silicon Valley Bank. We rallied, consolidated in April, May. June, July, we rallied high. Then we fell down in July, all the way back down to this consolidation. And last week, after the federal announcement, we had a snap back up in the market. If I zoom in here, and I wanted to show from here to here, if I take the spike, and we talked about it in the video in last 3 weeks. If I show you the highs and lows, we got a 10.18% reversal from the bottom to the top. If I come back to up here, that's about 12.5% higher than where we were a couple of weeks ago. Is it possible we can go further up to this high? If I take this candle here, all the way up to this consolidation up here, that's going to show me a 17% yield back in the market. But even if we fall back in this range here, we got next week, short week trading, we got Thanksgiving. Most of the people are going to be heading towards with their families, loved ones, and friends. So make sure you enjoy the holiday. The market's always going to be there for us. Remember, it's a short week. Trade what you see on the charts. Don't trade what you think. This is the S&P 500. Let's go to the Nasdaq NDX. And I wanted to show the NDX was a little bit more stronger than most of the sectors in the S&P. You can see that Apple, Amazon, Google rallied quite a bit, Netflix and so on. But Microsoft on Friday, there was a report from AI. The CEO left, as well as the founder of AI. He basically quit. There's going to be a little bit of turbulence in the market on Mondays. Let's see what the market offers us. Remember, from here to here, if we take this line from this area low to this high, we got a 13.13%. back up in the market. So remember, we trade what we see, not what we think. We use an RSI between the 85 and 15, the reason behind it, and we use an average to give us the crossing between 50%, which is the line that's if it is bullish or bearish. And at the same time, if we're trending downtrend, we look for the bottoms to bottom out. We look for the tops for reversal. But remember, we can stay overextended at certain times. We can stay oversold for a long period of time on the lows. Even the RSI doesn't turn. Remember, it can turn if you use an adaptive algorithm that's a little bit more speeded, and it can read the data for you in the market instantaneously, or you can use a MACD crossovers as well. It will help you with the volume profile or the time spent in relationship to the price action and the time spent when there is momentum bullish or bearish. We can see that the range on Thursday was inside day, and on Friday it looked above, failed back in, but we closed on a positive note. The open is basically the square, the close is that little triangle. The open was here and we closed up here. We were a little bit on the downside. We rallied back up, but we stayed above the Thursday and we closed a little bit positive on the Nasdaq on Friday. Let's go now take a look at the VIX. I want to show you the VIX, which is the VIX, the pure VIX is the fear and greed gauge. It was expanding to the upside last week after the Fed announcement. It came back down. We can see that we were on a slope every time we touched that $13, $14 range, $12. We rallied up. So we created a symmetrical rectangle. We pushed higher, but we had lower highs from the prior high. Then we fell back down in the range on the $13, $14 range. Usually when it goes back to that $10, $12, $13 range, start to accumulate, because if there's any changes in the market, you have something to protect you. It's like car insurance. You buy the VIX to hedge your positions on the long term in case of a reversal back up and fear starts coming back in the market, because the fear gauge 2 weeks ago, we were on very fear gauge. Now we are on a neutral platform on the VIX. Let's take a look at the DXY, dollar sign DXY. And I mentioned that last week in the video, and I said this is the prior year high and low. And we kept coming to this range. We kept looking at the 61.8, couldn't clear it. We fell through the 50, which is the Fibonacci here, coming back down from the high to the low, which is the October, coming back to the 50 Fibonacci or the 50 SMA or the 116 SMA and the 61.8. There is a possibility of the dollar finding grounds and reversing back up. We are still in an uptrend wedge, but coming back down in that sharper trend on the DXY. And we can see that the DX, it was sitting at 105 for a while, 106, eventually fell through that 105 area, coming back to the 103. Pay attention to the 101, 102. It's a very important area in the DXY. Let's take a look at that right now. The bond market, the TBT, which is the ETF for the ProShare Ultra 20-year yield, and you can see that the interest rates started to come back. You can look at the ZF, ZN, and the ZB. It can give you a better yield because the longer term yield is about 4.9%. With home loans and all that and business loans, it's a little bit about above 7.5, 7.25. And the shorter term, which is the 2-year, was sitting about 4.4, 4.5% on Friday when the market closed. That's TBT. Let's go now show you how to do the measured move on the micro ES or the SPY. I will use these two, keep the video short, brief, and summarize. You can see this is the weekly. We're going to convert this chart to an intraday chart. We're going to go intraday. We're going to do 10 days. We're going to use 4-hour charts so everybody can see what's going on the charts in relationship to the overall market. We know this is the gap from the prior week. We had this rally back up. We consolidated. If we look at the Monday's low and Sunday, this is our low for the week. This is the high for the week. And what I want to do is get a measurements for the chart. We can use this measurement. We can go from top to bottom. Down here, this is Monday, and I'm going to extend it one more day to the back, because if you can see, I have -1, +2 on the top. This is 125, 150, 180. I'm going to make 1.2 on this one. And I'm going to do, instead of 70, I'm going to use 80. 0.8. I want to change them a little bit so everybody doesn't say, how come this is just minus 0.2? And I'm going to use as well point, instead of 0.25, I'm going to use 0.2 to show you the measurements in the way you can set these up. You can add these lines on the upper extension and the lower extension, so that way you can have them on your charts on weekly basis, so you know the ranges of the overall market. Usually when you get between the 0 and the 20, usually buy zone. When you get between the 80 and the 100, usually is a sell zone. And sometimes you can get 2 standard deviations to the bottom or to the upside. It doesn't matter what the market does. Remember, the RSI, the MACD, the momentum indicator, the DMIs gives you the direction of the momentum, the way the market is moving up or the way the market is moving down, and you don't have to have a biased opinion to where the market's gonna take you. So this is the measured move where we can look at where the 18 SMA is holding and the 50 is above, below, and the 116. If the 18 crosses the 50 on the fast time frame, there may be a change in trend. Pay attention to it, and this will help you out. Let's take a look at the QQQ, and I'll do SPY as well. Here's the QQQ. We can see this was the Friday low. This is the Sunday range, and the Monday to Friday, this is our range for the week. You can draw them either way. You can see how it did them. The machine, if I drew from bottom to top, the numbers are going to be upside down. And if I do them from top to bottom, the numbers would be a little bit more neutral to that side. And we're going to extend it one more day. And I use the weekly, the daily on these charts, so that way we can get a better view of the overall market. So that way we can see the ranges in relationship to price action and momentum. This is why we use it. And you can see that the Nasdaq was in range. We rallied up, we fell back down, rallied back up, and closed basically neutral from Friday. This is the volume profile. The volume profile has a value area high, a value area low, and a POC and a time spent in relationship to the POC. The POC is in cyan color, the POC where the price, where most contracts were bought and sold, and the time spent is in yellow, where most of the time was spent in relationship to where the open is and the close. The open is in a box, which is in cyan. I'm going to zoom it in so everyone can see it. This is the open on the Nasdaq QQQ ETF, and there's the close on the ETF on QQQ after the 4 o'clock close, because the market goes till 5 on ES, S&P, Nasdaq, Dow, Russell, and the ETFs for QQQ, RTY, which is the IWM, as well as the SPY. So this will help you to understand how to do the measurements. Last, I will do SPY for you. And I want to do this on the weekly to show you how it looks like. You can see that the SPY, we had a little bit more movement. This is the open. This is the close. We had the open here, and we had the close a little bit lower due to the fact I'm going to talk about Microsoft a little bit here. Microsoft. And I want to show you because AI, the CEO got fired by the board of directors. So the founder decided to quit as well. So it dragged Microsoft lower. We're going to pay attention on Monday what the overall market's going to do to us in relationship to what Microsoft holds, because Microsoft is held in the Nasdaq 100 and is held in the SPY. It represents about 5% sector in the Nasdaq 100. Similar to Apple representing about 8%, Google represent about 7.5% because you go Google, Google and Google. So let's go back now, take a look at it on the weekly so everyone can see Microsoft. And this is the reason why I wanted to bring this up. Microsoft had an inverted reversal back down, which is a hammer. Pay attention in case it falls back in this range. It's going to give you a little bit more opportunity to purchase in relationship to last year's high, not the prior year. This is 2022, this is 2021. So I would look for this area. This is halfway if you take the high and low. Coming back, this is halfway. And if it comes back to 61.8 around the 132, 130 area, that'll be a great area for Microsoft to find grounds on Microsoft to purchase back up. Let's take a look at it on the daily. And the reason why I put this up, I wanted to show you that big rally up and the reset coming back here. There's a small little gap here in the charts. You can see it right here. If I get a box, I want everyone to see it. We're going to change this color on the chart and we're going to edit the property. We're going to extend it till 12, okay, 12-1. And we're going to do the same thing. We're going to change the color. Let's make it purplish pinkish and push OK. And you can see where the range it is. This is why I am looking between the 50 and the 61. Somewhere in this range is going to find some ground to find a support because this was a consolidation, looked up, fell down, rallied up, couldn't make it, fell back down, and here we got the breakup. So trade what the charts offer you and pay attention to the 18 SMA on the 4-hour or the hourly in case it crosses the 50, which is the yellow in the SMA Fortune 500 company. It can be used for the Microsoft, it can be used for Apple. These are simple moving averages that I use. They are very helpful. So let's go right now, take a look at the micro NQ, and we'll just finish up right here. We can see the micro, this was the consolidation. We rallied up, came back in on the micro. On the charts on the daily, we can see we had this gap here, we have this gap here. We do have one here in the overnight, but it's not showing due to the daily chart. If I go in the time frame to an intraday and we do 10 days, we go 4-hour, okay? This 4-hour is going to show me where the gap is. If I go style in the setting, if I go to appearance, in the futures, I'm sorry, if I go to the futures, show extended hours, and if I uncheck and I push apply, it's going to show you where that gap is from the prior week. You can see it right here. And if I do edit the property, extend it to the right, it's going to show you that gap there. So we got to pay attention to Microsoft in relationship to that range from Friday and Monday. That whole range, do we fall back in to fill this gap and the prior gaps? If I go 30 days on it, as I do 30 days, you can see where the gaps are after the report from the Federal Reserve Board, that rally, gap up, continue higher. Then we had this gap last week. It was range bound, the Nasdaq more than, looking above, and 3 days consolidation inside day. So pay attention to what the market offers you. If you have any questions, please get a hold of us. We're here to help you. Micro ES and Micro ES, and here we go. So that way you can see where the levels are, and I hope this video was helpful. And everyone, enjoy your weekend. Happy Thanksgiving. If I don't get to talk to you on Twitter or get any hold of us, enjoy it with your family. Take care.